Welcome to Markets Now. I'm Michelle Rook along with Vince Boddicker with Farmers Trading Company. A down day in livestock grains, a big rally today. Of course, it's been a weather-induced rally, but also a big drop in crop ratings yesterday has really pushed this market. And some of those were pretty surprising, like Illinois and especially Iowa, weren't they, Vince?
Yes, the second week in a row in Illinois, whether it be corn or beans, and you was at 36% good to excellent corn in Illinois, and that's unheard of. I did take the other side of that. You watched a few of those people that talked about, well, last time you saw a rating this low was 1992, but you still came back and had a record crop. So we can still be done, but you really got to start doing something, I think, in the next few weeks as far as rains go. And one has to believe 181 probably isn't in the cards anymore.
No, so like you said, we need a change in the weather forecast right now. It doesn't look like there's a whole lot of rain in the extended models, though, is there?
Not for that eastern corn belt, and
Yeah.
I'm not sure even in eastern South Dakota if we're going to get much of a change. It'd be great if we did, but I'm guessing before much is going to change, you need to get that blocking ridge to shift east from the Great Lakes and that Bermuda High that's setting out in the Atlantic to shift south and west to be able to get some of that Gulf moisture to come up. And until that happens, I don't see a lot of change.
So, Vince, we have rallied from the lows here just maybe a month ago in December corn over $1.25. We're up over $2.50 on November beans from those same lows. How much higher do we have to go to start pricing in some of this lower yield, do you think?
You got to believe you did some of that already, but I think right now everything we're seeing is psychology. You got people that sold near some of those lows because people convinced them you were going to have a big crop and it could only go lower. And they're saying, geez, what do I do that for? I think you're liquidating positions at some point in time. You got to believe somebody's going to put the stoplight on and say, okay, so we're tighter on the crop than we thought we were going to be. But where are we really competitive wise in the world? And with the big South American bean and corn crop, is China going to get supplied through South America? And do we have a lot of export opportunities?
You bet. Now, you watch the charts. Where do we need to close here today to keep this rally going? And if we do get above those chart points, how much more do you think we'll see just in the near term, anyways?
Well, December number would be 611. I think September is 627 and July corn is 675. Those would all be numbers if you get at least two of those closing above those numbers. That's a GAN timing number that would say that a daily close above that gives you the next 3 to possibly 4 months in that price direction. Really no targets. I have seen people that have put algorithms trading together that used to be traders on the floor. Think you're going to fly right through the 2012 highs in corn, and maybe you do, but I'm not sure that's good for the farmer and for the world in general.
No doubt. Do you have targets on beans?
I have not looked at beans all that closely, to be honest with you, Michelle. The January low that we need to get through, we're just right at around that 1365. January high would be around 1415, a close above that. So we have a little ways to go before that one triggers you to the top. Beans not near as overbought as corn is, but again, that's an impressive rally when you look at it.
No doubt. Let's also talk a little bit about demand. The market really, at this point, doesn't care about demand. Is that right?
I don't think, I think right now it's psychologically at some point it's going to kick in and say, well, let's not forget about this other component. And you use the analogy. Okay, so let's say we're down to 90 million bushels of beans for a carryout number. So nobody wants to buy it. Who cares? It's irrelevant. I mean, you have to have both of those components there, and not that we don't have domestic things there, but we still need to have foreign demand and exports going to keep prices high.
Yeah. So we did not talk about the lower ratings on spring wheat. Those took quite a drop, 9%. And boy, you look at the Dakotas and Minnesota, and things are not looking good because of heat and dryness, right?
Right, and you got to believe that's propping up the winter wheat as well as the spring wheat.
No
And I
doubt.
think that was a shocker. Then they were looking for a few percent drop, but not that. But yes, wheat. Not that corn and beans really like excessive heat, but we know that wheat doesn't, for the most part, to develop and get yourself a good yield.
So wheat isn't just a follower here of corn and soybeans. It's trading some of its own fundamentals.
I think so. And you take in Putin's continuing to talk that the Black Sea deal probably doesn't get done. I think that's old news, but it all can add fuel to the fire. We did see some reports yesterday that northern Russia, where it was dry, is starting to rain, is starting to get a little drier in the south, which should help production over there. But again, where is that going to go? That's going to supply the, maybe Asia and Europe. But what do we do with ours? Wheat crop is, I think, really tight here, and crop ratings on the winter wheat, I don't think you can pay a lot of attention to, because we're into harvest and you're into abandonment acres. And
Yeah.
I think when you get all done is really the key there.
No doubt. Cattle market setting back, understandable in the feeders with higher corn, but how much more do you think this market is going to correct?
And I don't think we can forget about numbers are tight, but could you take $20 to $25 off of feeders and really bring people back to reality and say, what just happened here? We did a very similar thing in 2014 from the last week of July to the middle of August. And then we came back and put new highs in. I think we can maybe do the same thing. But um, we got fairly complacent thinking tight numbers are there. We're never going to drop this thing. Well, if it's dry and people have to start liquidating more cattle in the West and we're short of feed, all that can make a difference down the road. It's friendly, but short term, it can be negative.
How much of a key is it that the funds continue to defend their long position, especially as we go into the end of the month and the end of the quarter, where they could easily maybe take some profits here?
I think it's concerning. You have to look at it. As we noted, commitment of traders report Friday added 5,000 more longs to the Fed cattle, 120,000, which is extremely long. If they decide to get out, Katie bar the door. The other side of that, just maybe from a more short-term factor, would be somewhere around the 22nd of each month, we're going to put a high or a low in. Right now, it looks like maybe putting a low in. If you got a decent rally and got within a couple of bucks for some reason of recent highs, whether it be feeders or fats, I think producers should be out there looking to put some protection in place. If you come back and you put new highs in, lift it. But I don't think we can't be sideways to lower here till next fall.
Although some of that, whether we rally this weekend or not, or the end of this week is going to be kind of predicated on what we get in the cattle on feed report or not.
I think so, and I'm not sure you should get lots of bad news in those coming in the future. If it is, it's a surprise of some type, because we know numbers are tight and they're not going to rebuild very fast unless we get some shakeup of big influx from Canada or Mexico. I think they should be neutral to friendly, but sometimes it's not going to make a huge difference. Like with the other markets, what do we do from an economic standpoint? Does somebody pull the trigger someplace in the world they shouldn't, make a difference?
Yeah. And the flip side of that is that the hog market is now rallied over $20 off its lows. Does it keep going?
I think you're getting overbought, but the way we beat that market up, it needs to get some relief. It'd be interesting when we get the next cold storage report to say, what did we do with pork? Did we pull some things out? I think this is an opportunity for the consumer to come back in and buy some pork at reasonable prices, put it in the freezer. It's going to help demand and in those things short term. I did visit with some people in the pork council business over the last few weeks and ask them, why isn't the pork people not out here promoting your pork loin against hamburger and other things from the cost standpoint? And they said, funny you should mention that. We're just in the process of doing that. So it'll be interesting to see what they come up with, and does it make a difference? Does it make that consumer wake up and look at it?
Yeah. Well, we've had a nice rally in cash and cutouts, and they are continuing to keep going here, at least at noon. So maybe that'll hold things together for a little bit longer. All right. Thanks.
Have a great day.
You bet. Thanks for joining us. Vince Boddicker with Farmers Trading Company. That's Markets Now.